Hey guys, another little simple lesson here. A good one to use. USO oil moves very slow and methodically. By the way, Roku, usually when these have a double from an IPO price at 14, you start to slow down. You get to 28, it's probably going to start to slow down. Obviously, there's way more demand than supply here. This move's probably going to have to get digested here to this 29 and change. I flipped a little bit, and I don't have any shares now. I kind of got in gamble mode and just took a stab, and just pure luck. I don't like trading like that, but it worked out. This could easily be a $35 or $36 stock. There's a great fundamental story behind it, a really interesting company, but I think we need to digest this move here from the 14. You get a double usually, traditionally. You get some digestion before we back and fill, and then make another move later down the road once the news comes out and it's open for analyst objectives. So here's the move on the USO oil that I want to look at. And once again, we don't want to do traditional technical analysis like everybody else is looking at. If everybody's looking at the same thing, where's our advantage? So here's your 3-year chart on the weekly. No problem using wicks and tails on weekly. But once again, I want to catch common areas. I don't want to miss candles. And if I hit that top candle, I'm going to miss this one here, and I'm going to miss all these in here. We get a three-point common touch if we use the line going through the intersection of the January 3rd candle on the weekly. So same thing on the bottom line. After a big move where we pull back to, this one was simple to grab. We can use a tail on that one and catch this in here. That puts us through the intersection of this line here. And then where does it coincide with over here? The top line. So perfect example here. How we had an upward move, a slight consolidation with a downward trend, but a longer term higher lows. But then we break down in here. We break down twice, obviously. Get back up, the tug of war takes over, failure on that weekly, and then the drop. Now we go back and retest that trend line again. And where do we hit? To the penny on the wick. So we're probably going to get a pullback in oil here. But can we recharge and then break through this top line? We probably can. I don't know whether the fundamentals support it, but if you start looking back at 5 and 10-year charts on oil, we're a hell of a lot closer to the low end than we are to the high end. But this is how things move over time methodically and change direction. So simple, really interesting chart here on the psychology. You can see the open below it. Couldn't hold it, and it took off. Couldn't hold it means the sellers couldn't keep it down. Busted through, but they sold ahead of the top trend line. They weren't comfortable holding it, waiting for it. Not a lot of confidence with this move, and start to break down failure here. I'm sure the volume here was pretty big. So once again, simple. Here's your breakdown, retest, and now we're back up retesting that trend line again. If you're using horizontal, you'd say, wow, we got above that level there. This is positive. It's slightly positive, but until we start getting above these two trend lines, I'm not super impressed. We're just kind of waffling back and forth between a longer term, slow, methodical downtrend. Big move from the bottom, though, no doubt. AAOI 3-year chart. This is looking super interesting here, and today's a huge day. A huge day, in my opinion, technically, at least today, in the latter part of the day. To keep this green and get above 65 would be tremendous. To me, on a longer term, if the fundamentals support it, technically this is easy upper 70s. So today is really crucial, and looking at the 1 year, it's even more interesting. Once again, let's use our technique. Big move here, big move. Now remember, this is a 1 year daily. This thing's had a hell of a run. I didn't mean to draw that line, sorry, but we've talked about this over and over. When you go from 20s into 100, it just takes one little bit of a change in psychology on the stock, and you're gonna get a tremendous pullback here. So Fibonacci wise, this is nothing outrageous. Could it have kept going, and if the valuation could have kept up based on the news? Probably. But is it horrendous from something to go from low 20s to 100 and back into the 50s and 60s? No, not at all. So this bottom trend line is what we're looking at here. This is where we had the psychological change in direction here. Big pivot off here, huge run, a lot of volatility on the top, probably tremendous volume as well. Forget about these candles in here, because really this is the area that really kind of needs to get back above, and that's the 68 and change area. Once again, that's where the tug of war started back a few days ago and into the last week here. So 68.50 obviously would be tremendous to get above there and hold on a close. A lot of static action here. But this chart's interesting here, super interesting as we zoom in a little bit on this. So there's two things that I'm looking at here that I like and I don't like. I didn't like to see that we have this big pivot move from the bottom here. We made the final run in the last leg here. And then we came down, and let's just get a common touch across here because we want to catch the tail on those candles. And that kind of put us around the 58, 59 area. I don't like that we failed there, but I do like that we're back above it. So like I said, we got a mixed bag here for sure. Um, any interest in the stock that would overwhelm on the buy side would definitely not have let this area fail. And this is where we started kind of picking some stuff up earlier when we were doing some trades. I got shaken out. Looked like we're going to bust a long-term downtrend and keep going. Maybe test the low 50s into the high 48s. We didn't do that. We returned. We got it back above on this big bullish candle. Then you got the shooter here, and then a pull back to the trend line again. So, holding that trend line and then getting above it with some energy and not breaking that back down below. If we look at a 10-day chart, I'm sure you can see it a little bit more clearly, but interesting day here. Today's a huge day that we kind of get back above the 65, 66 area would be tremendous. Really start to squeeze the shorts in here and put pressure on this, because I think if we make a second run at these higher levels, we're going to bust through. And obviously the 71 was a double touch, both here in that channel and here on the horizontal channel. So I like this. Just going to take a little bit of news. It seems like we're kind of leaning towards the positive side on AAOI, Applied Optoelectronics, but I'd love to see a confirmation here. I don't want to go see a retest this bottom line, and then hope that this candle really proved that buyers are willing to step in. Was this just short covering related to news? It's hard to tell, but the risk reward here in AAOI using this trend line here would definitely tell me that there's more upside if we use that as a stop on a close in that 58 change area than there is downside. So anybody doesn't have a position in there and wants to wait for it to pull back maybe in the 63s and get a little shakeout here. Guys getting scared once they see the trend reverse a little bit in the short term from that other pivot line around 63. I wouldn't be opposed to that and using this as your closing stop. If we close below here, there's definitely some fundamental issues that we're not aware of, and might be a little bit concerned. But on a risk reward, if we're looking for high 70s longer term, and 58 is our stop, obviously you can do the math, and this looks